Hello, Maverick traders. Welcome out to your market roundup, August 28th. Corey here with you. Here's what we're going to cover. We're going to go through the broad markets, top-down approach, what is moving, what meaningful news is out there. For example, tech IPOs, what does that mean? We're going to talk about sector rotations, where money's flowing, and then finally we'll get to some bullish, sideways, and bearish trade highlights. A lot of charts to get to.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so let's take a look at broad markets. Pretty nice day. Markets up just shy of 1% in all of them. Dow, S&P, NASDAQ, Russell, really no real difference. Oil and gold both about flat on the day. As we look at the daily news, tech IPOs are making a comeback. And I sort of look at this as a cup half empty type of dynamic because although it's good news that the markets are getting back to normal, I look at it from the standpoint of they're aggressively trying to sell into a market where tech has been priced up, and tech is such a big part of the market. Maybe the market has an appetite for it. You could look at it cup half full, right? There's buyers out there for this, but I worry that the smart money is looking to sell and get smaller in tech, and as goes large cap tech, Apple, Microsoft, Nvidia, so goes the S&P 500. Bitcoin trading volumes have collapsed. Bitcoin is just not the popular area it was. It's a thing that really flourished in a low or zero interest rate environment. It's something that flourished out of collapsing currencies and when money printing was in full effect. Now, with a more hawkish Fed and basically deflationary, they're trying to drive down trying to reduce money supply, that sort of idea, it's less intriguing as an investment idea. Advanced decline line, about 68% of stocks down today, and the 50-period moving average, a slight improvement from last week, 32% of stocks above the 50, but we're still in more of a bearish market with 68% below. As we look at the S&P, this is the chart pattern that I highlighted last week, and I want to reiterate that we have the makings of shoulder, head, shoulder. And I talked about last week that it was my expectation that we would get a bounce, a rally, that would take us right up underneath these moving averages, which would be about in line with that level, right? We drew in the lines. Here's the shoulders, here's the neckline. I expected a bounce. We got that bounce. As we bounced up to that level, look at how initially we got hammered. We sold off hard for a day or two, and now we're kind of climbing back up. So this creates that, I would call it the make or break area for the markets in essence in terms of the short-term trend. We would confirm this pattern with the break of the neckline. So bearish if you go here. If we can get back above these moving averages and forget this ever happened, well, obviously that's the bullish outcome. But we're in that sort of price pattern where we could go or we could stay. QQQ, same thing. I thought, and I said this last week in the video, that the QQQ might not be able to get up to that prior shoulder. Well, it did for all of about 5 minutes at the open, and then it collapsed back down. You can see the neckline down here, right? So you have the shoulder, head, shoulder, and this is make or break. You could break up, you could break down. One is bullish, one is bearish, of course, in terms of who has control, whether the trend persists. But I would say the signs lead me to believe that we're still going to break to the downside. We've got bearish crossovers in the moving averages. We've got downward sloping shorter term moving averages. So I would say the bears have a little bit more short-term control of this market. It's not clear and 100% obvious or anything like that. Nothing ever is, right? It's never a 100% probability, but I'd still give the bears a little bit of the benefit of the doubt. Now, As we look at the heat map, mostly green on this bullish day. Healthcare lagged today. That's where you can see this little pocket of red, no doubt. Large pharma, Johnson & Johnson, Merck, Abbott Labs, and so forth. Little bit of a lagging dynamic, but energy remains strong. Some of these other sectors. And all right, so let's get to some ideas on the bullish list. A little bit of a highlight of energy. I would say there's more energy names popping up on my bullish scans than other sectors generally. On the bearish list, pretty much a mixed bag. I would say there is like the solar stocks that which is energy related are really lagging and underperforming. So if you wanted to do sort of a pairs trade, you'd be long oil type of names, nat gas type of names, and short the solar type of stocks. That makes sense from a charting perspective. But let's look at a few charts here. So here's Apache. This is a bearish to bullish reversal that has taken place. You can see this level of resistance. We broke through it on volume. We've recently corrected back towards it and looks like we should continue on and upward. Really outperforming the markets and so forth. You can see the upward sloping price action. Even on this correction, you can just see it's a pretty low, light volume corrective phase. The best volume day was actually at the lows when we bounced nicely off the lows. So I'd say the chart looks healthy. It looks strong. Other ideas, I mean, just from a charting perspective, you got to give Visa the benefit of the doubt. We've got more of an ascending triangle. Financials don't look that good, but you can find little areas of strength or weakness within various sectors oftentimes. So if you felt like you wanted to be in the financial space, I would certainly lean more towards a Visa, a MasterCard, a Berkshire Hathaway type of name versus a lot of the money center banks, which have been lagging. Now, I wanted to look at the gold markets, and if you look at this daily chart of GLD, it doesn't look all that enticing. I mean, really, the trend is down. You can see lower highs and lower lows, and we've been in this lower channel. So that looks bearish, right? At first glance, we'd say, well, we're in this downward trend. But as I took a little bit closer look at gold, it kind of struck me that we're at the bottom potentially of the long-term chart. So let me flip this to the long-term weekly chart. And now it tells a little bit different story here, where we have resistance. We failed at resistance all the way back in 2022. We fell off a cliff. We scratched and clawed our way back up to retest that in 2023. We failed again and we've fallen back, but I think this 175 level is important. I think what is happening is the process of a consolidation, what we call a cup and handle, right? Made famous by William O'Neill in the book How to Make Money in Stocks, and it's just been utilized by traders. All price patterns are, it's not science. It's just, hey, can I identify what's really happening? And what's happening is buyers. Buyers bought us off the low to retest resistance, and now buyers are coming in more aggressively, establishing higher lows. So whether you see this as cup and handle or ascending triangle, I think the gold markets might be a good market here in the coming weeks and months. So I've kind of flipped my outlook here in the short term towards a more bullish stance for those types of material names. So I thought that might be interesting to some. On the bearish side, I still like large cap tech, the apples of the world. Look more like shorts, look more like the bad price action, big volume breakdowns, rallies up but on lighter volume. This is trading 101. We are in sell the rally mode. We've come up to a declining 20 period moving average. If the markets are going to go up, they really need Apple and these stocks to go up. If they're going to go down, it's probably going to be led by these types of names as well. And I think that's exactly what's going to happen. I would suspect that Apple is going to come down here and make a new low in the shorter term. First Solar, like we said, if you were looking in the energy type space, mostly I'm bullish on that sector. But if you're looking at an industry group within, the solar names look lost and really beaten down, but probably after maybe some short-term bounces, probably plunging to new lows. So those are some to keep on your radar. The rest of this week, we're still in this sell the rally mode overall in the markets. We've got core PCE on Thursday. We've got non-farm payrolls, which is always important on the first Friday of every month. That comes out. We've got earnings, Broadcom and Best Buy, Salesforce, CrowdStrike, Dell, Lululemon, and such. So earnings are winding down, but there's still some companies reporting. Hope you enjoyed this market roundup. Have a great rest of your day, and we will see you next time. Goodbye, everyone.